Hello everyone, welcome back to my channel. My name is Chawanne Burns. Please click that like button and that subscribe button. In today's video, we are going to discuss the SBA Economic Injury Disaster Loan declines, okay? We are specifically going to address the economic injury or your economic injury was not substantiated declines, okay? And what you need to do to put in for a reconsideration. In my last video, we discussed credit history. So if you receive the decline letter because of your credit history or lack thereof, or child support, you want to watch that last video. I will link it in the description section. But in this particular video, we are going to discuss economic injury was not substantiated. We're going to talk about the reasons why they will send you that letter. And also we're going to discuss what you need to do, what documents you need to include with your reconsideration to get approved for your economic injury disaster loan. Okay, there are two reasons why you will receive a decline in regards to your economic injury was not substantiated, okay? For the economic injury disaster loan, it is to help the businesses meet its working capital requirements during the disaster period until normal business operation is resumed. Economic injury is a change in a financial condition of a small business concern that is directly attributable to the effects of the declared disaster. This change in the financial condition must result in the business being unable to meet its obligation as they mature or pay ordinary and necessary operating expenses. In layman terms, the disaster has a cause and effect. It caused you to decrease in your revenues, which causes or affects your payment or affects your ability to pay your normal operating expenses, okay? So that is the definition of economic injury, okay? And if they find that you are still able to sustain your normal business operations to pay your debts and all that stuff, they would declare saying, hey, your economic injury was not sustained, okay? So generally we measure, and they're using the word we, and this is specifically from the standard operating procedures for economic injury disaster loan, okay? This is a separate section in the appendix section. And you can find that, I believe it's on page, I believe it's in appendix 10. So at the back end of the document. Okay, so generally we measure economic injury by comparing the gross margins generated by the business during the affected period by the disaster to those generated in a similar non-disaster period. So Q1 was the first initial disaster of 2020. They will measure Q1 of 2019. Or second quarter of 2020, they'll pull that information, which is your gross margins, and compare it to 2019, Q2. Okay, so that's basically what it is. The difference shows the disaster financial impacts on the business operation. Next, we determine the amount of funds the business and its owner needs to operate during normal operations when they resume. Finally, we compare the disaster impact on the operations with identified financial needs. The smaller of these two amounts is the business maximum economic injury eligibility, okay? So the smaller one is the maximum amount that they will loan you, basically. Economic injury disaster loans cannot exceed the financial requirements the business and its owners could have covered had there been no disaster. Meaning, if you make the same amount of money, or if your output is low, your overhead expenditures are low, and you still are able to cover your overhead expenditures without going on in delinquency, they will determine saying your economic injury was not sustained. So option A, our analysis of financial information provided with your application indicated, now this is decline. This is the decline verbiage that they will give you. They're saying their analysis, that the information that you gave them indicated that you have been able to meet all your financial needs attributable to declared disaster event through your own resources without undue hardship. Because there are no unmet financial needs, we cannot substantiate any eligibility to economic injury. So just picture in your head, if your overhead is $100,000 a year, and that's with normal business operation, it's $100,000 a year. And you normally have a margin of 50%. I'm just throwing numbers out there. Usually it's 20% of your net that you actually would profit. But say, for instance, it was 50%. You have $200,000 that you could put in the bank without touching it. Okay. And so say, for instance, now you gross normally you gross 200,000 a year, and your overhead is 100,000. But when the economic injury or when a disaster struck, you're at 175. Okay. Usually they don't have the verbiage in here, but usually it's like 30. It has to be 30% decline in your gross revenues for them to say, oh, it's a disaster. Okay. So just think, I made 175 during a disaster. I'm still able to sustain my business without undue hardship. It's just less money that I'm putting in my pocket. Okay. So I just want you guys to get a clearer picture of what they mean. And like I said, I have to find it in here, but I know it's like 30%. It has to be, for them to say it's a disaster, 25 to 30% decline in your revenue. Okay. For that quarter or for that year or whatever. Okay. So option B. So this is what I'm going through now is what your representative will send to you in your decline letter. So they will tell you disaster gross margin exceeds normal. That means you making more money. So our analysis of our financial information you provided with your application revealed that your gross margins generated during the affected period by the disaster exceeds your normal non-disasters level. As a result, we cannot substantiate eligibility or eligible economic injury, which makes sense. So they're basically saying last year you reported 200,000 and this year you're making 225. So your economic injury was not sustained. Okay. But there's a caveat to that. Say, for instance, you did increase in revenues, but maybe your costs increased. So this next sheet that we're going to explain, or how can you combat these rejections, okay? So if you receive these declines, your economic injury cannot be sustained. When you send back your reconsideration, send back good verbiage. However, I did increase in my revenues, but my liabilities went up. My costs went up. And you could claim that in these notes, mortgages, and accounts payable, your schedule of your liabilities. So two things I want you guys to send, and they don't suggest it. They suggest this 2202 form, which is a schedule form of your liabilities, but you also want to put your P&L. And if you have QuickBooks, you could quarter your P&L and you could put a snapshot. This is my cost of my cost of goods sold in 2019, and this is my cost of goods sold in 2020. Okay. And your P&L will reflect that, okay? And it'll reflect all your liabilities, what your monthly expenditures are for, or the quarterly expenditures are, what you're paying out. So that's one document I want you to include. The second document is this particular document, which is what the SBA, they have is a filler, a PDF fillable document, and it's called a 2202 form. And what you need to do is put all your creditors, long and short. So notes, something you pay. If you have a mortgage, you put that on there. If you have utility vehicles for your business, you put that on there. Even long-term lease notes, same as mortgages, but lease notes. Hey, you have a lease of 5 years. That's something, if you break that lease, they still gonna want their money. It doesn't matter. So that's a long-term liability. Any creditors that's on a 30 accounts payable, which is your vendors, put all those obligations on there, because they need to get a real look of what you're paying out. So even though your revenues increase, your output or your liabilities might have increased as well due to tariff charges or whatever you may have. So list all your creditors on this form, short and long-term creditors. Okay. You want to list the original amount for the extended amount of credit. When I sent mine in, I even put my credit cards on there. They said you can't pay full credit cards, but you still have a short-term liability. Even if you make those minimum payments, you still have to make those minimum payments on your credit card notes, okay? If it's a business credit card. So put everything on there and then put the original date. You have a current balance, and you need to know if it's current or delinquent. Maturity date and payment amounts. Monthly, they want you to know if it's a monthly amount or this is what you pay yearly. Now your P&L, when you send a snapshot, I put mine in a spreadsheet where I put 2019 quarter 2019 and quarter 1 2020. And yeah, the first 2 months I made pretty decent money, but the last month in March, or the last month in the quarter, I didn't make nothing. So if they're looking at the snapshot of, a certain period, because on the loan application, it only gives you, they just ask you what's your total revenues and what's the gross or your net or cost of goods sold, and then they make their calculation. So they don't have a clear picture. So you need to send that in to them. Okay. Sometimes before they give you an economic injury was not sustained, they will ask you to present some documents in the loan portal. And off of my experience, they normally only give you 24 to 48 hours to do this. And then they'll send it on a Friday at midnight. Like you will never see it until you wake up on Monday, or if you just happen to look at it on Sunday, requesting these documents before they send you a decline letter. Okay, so you guys, let me know if you have any questions, if you need help filling out this 2202 form. If you have any questions about your profit and loss statements, that's a P&L. I used P&L earlier. but it's profit and loss statement. But you want to do a quarterly profit and loss statement so they could get a good snapshot of what you did in 2019 and what you did now and your schedule of your liabilities. Okay. So that is the end of our video. Yeah, that's the end of our video. I will link the consideration email in the description section. And I am sending all my good to you. I will talk to you soon.